Good morning. It's Tuesday, August 27th, about 6 a.m. Central Time. Overnight, the precious metals are weaker after Monday's positive but consolidative trading pattern, meaning that the market was neither continuing nor countering a longer-term trend. The overnight price action shows that December gold down $10 at 25.45. The low was 25.38. The high was 25.54, so continuing to consolidate in a tight, narrow range. December silver down 7 cents at 30.37. December copper just slightly higher at 4.28. October platinum down 6 at 9.66. Looking at the copper market, BHP, they reported earnings, and they also said that an uneven recovery in the Chinese economy, sluggish industrial demand, and higher interest rates really caused volatility in the global commodity space, and they still continue to see that in the near term. I believe that's why we saw some of the weakness here in the broad-based metal space just recently. However, focusing on copper, which is positive in the overnight session, they also stated that some sectors of the Chinese economy that drive steel demand, such as shipbuilding and the auto industries, are actually performing quite healthy. I believe that that's that auto industry data that's helped prop up some of these prices, especially in the copper market overnight. Now, I do expect silver to carry some volatility in the September expiration, and that's why I believe someone can time the roll, and I mentioned that in the last couple of videos. Additionally, our seasonal analysis shows substantial historical weakness in both gold and silver for the month of September. I'll break down all that seasonal weakness and also the seasonal buy point in September for some of the precious metals in the Metals Edge. So if you don't get that report and you're watching this on YouTube, scroll down, you'll see the Metals Edge. You can fill out your information there. You get a free 2-week trial of that, which will carry over into September. Now, talking about a little bit of weakness in silver, and a lot of people are going to resist that type of narrative. You really should have two goals when you're trading the market in any commodity market. The first is to make money, and then the second is to become a better trader. Also, remember that some of the best traders only win on some of their trades. I'm actually listening to a really interesting podcast that's only released like 3 episodes so far called Putin's Trader, and the guy totally had insider information. They still screwed it up and they lost on some of their trades. It's quite interesting, and it's a short listen, so I don't really endorse a lot of podcasts and things, but this is just kind of a great narrative and a great story that I think many of you will enjoy. So how do you measure yourself becoming a better trader? Well, you got to keep a journal and you got to keep good records here. So like this is like, some of the notes here from yesterday and also the day before, and I probably got 100 of these journals stacked all over the place in every storage cupboard that we have here in the house. Now, getting into the economic data coming out here today, we're going to see consumer confidence come out, expecting 100.9. That's a small uptick from the previous month. So we're really going to want to watch that one because that one's going to give us a gauge of how this economy is doing, how the consumer is doing. And remember, they are looking for the consumer to remain a little bit healthier right now to avoid that recession. If you do get a substantially weaker consumer confidence, you're going to get that kind of feeling that the Fed dropped the ball on not cutting rates before, and I think that we might see some material weakness, especially in some of these markets. Kind of my line in the sand on the S&P 500 today, about 5,600. A lot of people put on shorts into yesterday's trading session when we were up near those highs at the start of the day, so they're comfortably ahead on those particular positions. Looking at the Fed watch tool, 71% chance that the Fed cuts only 25 basis points. And then if you go to 50 basis points, it's 28.5. So I monitor that data every single day because it gives me this kind of sentiment as far as how Fed fund futures and swaps are pricing things in. That's a different group of people out there. Those are the people that trade the bonds, the notes, and things like that. The euro dollars and the swaps, they affect where that's at. So you can kind of get several different gauges here to take the temperature of the market, and I think that's really important here, and it helps you become a better trader. Again, also, I think having a notebook and then also keeping track of where you believe prices and things will go. So like for the gold market, for instance, my line in the sand is that August 22nd low at 25.0640. I believe that based on volatility, somebody could come in and effectively purchase gold prices at about 25.3760, and below that would be 25.2150. Their line in the sand should be 25.0640, and then below that there would be pocket support down at the trend reversal point, which is 24.60, and then also the 50-day moving average at 24.55. So I just kind of measured out and mapped everywhere where things would be, and if you executed on that plan, how much risk you would take there. I also put out the probable ranges as far as what an upside extension would look like if prices were to take off here. And that's where, if you are playing the long side, where you might lighten up some of your positions and harvest some of those gains that you're putting in. So I'm providing complete risk parameters and then also target parameters. And then what someone wants to do is decide on how much they want to keep as far as a core position is concerned, and then trade around that. Now, looking at the silver market, it's still trading in a neutral trend. It needs to close over 30.61 in order to become a complete breakout. Now, the first level of support, I believe, is where I would want to re-enter on that December contract. Remember, a lot of you were selling out the September contract north of $30 yesterday, and a bit of trying to time the roll. I think on December, really kind of that downside first target would be 30.02, and then your first major level of support would be 29.78, the 50-day moving average. I think below that, from a risk management standpoint, similar to gold, you look at that August 22nd hook low, which is 29.21, followed by a trend reversal point, which you would not want to be in the market at 28.37 if you're a short-term tactical trader. So again, laid out a complete plan for you, and these are the things that you want to write down, or that I write down for you, and I email it every day out in that Metals Edge news piece. So we're going to want to continue to look at things here as far as when we get later on in the week, we get a little bit more data heavy into Thursday. Tomorrow, we're going to get a lot of Fed speakers coming out. And then Friday is kind of that day, that spotlight day, where we get the core PCE. So if we're dramatically in the direction that we want to trade in these markets coming into Friday, we'll really want to tighten up those stops and things like that, and then convert some of these higher risk positions back into more calculated risk options, maybe taking down some of our risk exposure or buying some protective puts. It's just the way you do this. It's not a set it and forget it type of strategy. There's a bit of management that goes along with trading in futures and commodities because of the fact that they're leveraged products and there's risk of loss in futures trading. So you got any questions, reach out to me, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading, get them out there.